I'm Janet with Radiant Realty. Thank you so much for joining me today. If you're new to the channel, hit that subscribe button and stay a while, and don't be shy. I love reading your comments and answering any questions you may have. So today I thought it would be a great idea to talk with one of our local lenders here in the Valley. I get lending questions quite often, and while I do know some of those answers, it's always best to speak with a specialist. So let's go talk to Matt and see what lending options he has and what he can do for you. So Matt, thank you so much for joining us today.
Yeah, happy to be here.
Great. So your company name, Flathead Valley Brokers, right? Mm-hmm. So can you explain the difference between a broker versus a bank in the lending world?
Yeah, so a broker, we're a true wholesale mortgage brokerage. So what that means is instead of having a single relationship with a single source of money or bank, we have relationships with multiple banks. Right now we have relationships signed up with 7 different banks. And what that does is it gives us a lot of flexibility in pricing, because some banks will have better rates than others. So you go to a brokerage, we're immediately shopping your loan for the best lending terms possible across multiple different sources. And then also some banks are a lot better at other banks in certain programs. So one bank might really like government loans, FHA loans and VA loans, and do really well on them, where they may struggle in other areas. And then that way I know with my client, I know which way and which bank to bring them to have the best lending experience possible.
Okay, perfect. So I am telling clients right when I say Matt works for a brokerage, so sometimes he can come up with more options, more lending options than say a bank or one particular company.
Yes, and the fun thing as being a broker as well is I have the ability to sign up with about 170 different banks right now. Wow. So sometimes there's some really niche, unique products, especially when you get into like alternate income qualification scenarios, that if there's a bank out there doing a loan for a residential home, I can find that loan.
Okay, so at what point in the process should a prospective client talk to a lender?
So ideally, they should be calling someone in the lending world first to figure out what they can do. That's okay. Most people do speak with a realtor first. That's fine. The next call should be to a loan officer. The reason being is you need to make sure that you can qualify for what you're looking for, and that we can also focus your search to make sure that we're finding a home that fit their needs.
Okay. So if they do that though, a lot of times they say, I don't want to buy for a year or two, so I shouldn't talk to them because pre-approvals are really good for how long?
So pre-approval in its true sense is as good for however long the credit takes to expire, and that's usually about 120 days. But if you get pre-approved with a reputable lender and source, as long as your overall situation doesn't change, you're pre-qualified for as long as that happens. If there's a job change or any significant life event, you're gonna wanna get in touch with your loan officer again to update them to make sure that you still qualify. But at the end of the day, we're always happy to talk with someone at any stage of the buying process. They're already under contract with a home, or if they are just thinking, I might be a year or two out until I can get qualified for a loan, or I want to buy a home. We're happy to speak with somebody right then and there, because we can help them game plan to make sure they meet their timeline goals. And then also sometimes there's plenty of people who don't know what kind of lending products are out there, and that we can get them qualified a lot sooner than they expected.
Okay, so that brings up a good point. If clients are moving to the area from somewhere else, they have a job, they need to get a new job here if they're not working remotely. How does that all work with the loan process?
Yeah, so it's not as hard as some people think. There's a thought that you need to be on a job for 2 years, 1 or 2 years before you can use that income, and that's just not true. What underwriters are looking for is a 2-year work history. So as long as somebody's moving here and they're not moving into a brand new field where they have no experience, we can actually get them qualified on their new projected income. You can actually close on a loan before starting the job in certain scenarios. So there's plenty of different options out there when moving here. And yeah, we can get you qualified.
And what about with school, if they're just graduating?
So as long as you are getting a job in the field that you were in school for, that can substitute for work history.
Nice. Good to know.
Yeah.
Okay, so another scenario that happens often is somebody is moving from another state. They have to sell their current home to buy a home here, but contingency offers are difficult to get accepted at this time. So do you have a solution for us?
Yeah, we have a couple different solutions actually. So that's That's a real world issue that we're having right now. There's a few ways to fix that. So one of them simply is a bridge loan. We have some products that will let you borrow from the equity in your departing residence to use as a down payment for the new one. So it's just unlocking that money before it's actually sold. That's one really good way to be able to put in a non-contingent offer. Some other ways are actually leasing out your old home as you leave. And you can either bring in your down payment from your own assets, or you can open up a second loan, sort of like a bridge loan. There's a couple different financing options there. So there's definitely some ways to strengthen your offer without having to sell your home.
Okay, so when is a good time for clients to lock in a rate? And how long is that good for?
So you usually you lock in a loan at the time of contract, and your lock rate can vary from 15 days, 30, 60, 90. Obviously, it's a little bit more expensive to lock for longer because you're locking in security of that single rate, because market fluctuates every day. There are some cool creative options right now, especially in a raising rate environment. We have something called lock and shop. So if you know that you need to get into a home at a certain time, we can actually get your loan in the system without an address, and we can lock that loan while you're going to find that home. And then that way you're guaranteed the rate of that day.
So it could be risky, but for somebody that's already saying we need to be in a home by the time school starts, it could be a great option.
Yeah, it's a pretty good option, especially right now, or in general in a raising rate environment. If you wait a few weeks, the rate might be a little bit higher than compared to what it is today.
Okay, so what about with new builds?
So new builds are a whole different animal. We're not really sure when the project's going to be finished. There's always a set project finish date, but sometimes it can go a little long. So what we like to do is we like to get in touch with the builder about 60 to 90 days before the project's going to be completed, and then we can start game planning on when to lock. It's really important that you lock through when you expect to be completed, because it's a lot cheaper to lock for longer than you need than to lock for shorter and then have to buy extensions.
Okay, so can you tell us a little bit about the procedure for construction loans and what you might offer for that?
Yeah, so we have a really cool new product called a one-time closed construction loan. So instead of the old way where you would buy the land and then get a short-term construction loan and then refinance that into a 30-year loan after your home's completed, we roll all of that into one closing at the close of the land. So it's a single closing instead of 2 or 3 different closings. You have a fixed budget because it's all agreed upon at the beginning. And then we get to lock your rate in today as opposed to a year or 9 months from now. And if you don't know what the rates are going to be from there, you get a lot of security doing it that way.
Okay, so let's discuss some other loan types that you might offer. First-time home buyers, jumbo loans. I'm sure there's more.
Yeah. So for first-time home buyers, you have a myriad of options. You've got some low or no down payment options. So those are really fun. You get treated a little bit differently as a first-time home buyer. Something that a lot of people don't realize is that a first-time home buyer is qualified as someone who hasn't owned a house in the last 3 years. So if you owned a home a long time ago and then sold it and have been renting, you actually re-qualify as a first-time home buyer after not owning a home for 3 years. So some other products, the USDA loan is a great loan for Montana. All of Montana still falls under the Rural Development USDA loan. It's just for rural properties. There are pretty strict requirements to be able to qualify for that loan, but they are zero down loans and they have very good interest rates and very low mortgage insurance. That's one of our favorite products to sell if it works for that specific scenario.
So it has to be a larger piece of land for that?
No, it really, so that's a little bit of a misnomer. Everybody thinks that they think rural and it has to be a big farm or anything like that. No, it just needs to be designated a rural area by the USDA. And there are only a few cities and counties in Montana that are no longer qualifying for USDA.
Oh.
Yeah, so Montana does a lot more USDA loans compared to a lot of other states. We also have FHA loans, which is another government assisted loan. Those are great 3.5% down product option, and they're great for new credit buyers because they don't affect, lower credit doesn't affect the rate as bad.
Okay.
So that's a really good product. We also love to take care of our veterans with VA loans, and those are awesome. There's no mortgage insurance on those products, and you can put zero down and get into a home. We also do have some down payment assistance programs. So those are grants that can help people with some or all the down payment to get into a home. And then we also offer jumbo loans, which is any loan amount over the county limit. Right now, that's $647,000. So those are a really good option that we have.
And that was recently raised.
Yep, so they raise those every year. It went from $548,000 to $647,000. It was a really big jump this year compared to previous years. It's really nice because conventional loans usually offer a little bit better terms compared to a jumbo loan. But when you do go over that limit, we do have different jumbo loan products. Some of them can be a little bit more strict, so we always want to work through them. And then we also have some really cool loans called non-qualified mortgages. So that's any loan if you don't fall into the traditional lending box. Some of those people are self-employed people who maybe write off a lot on their taxes or anything like that. And then there's some really cool investment property loans where you can actually qualify on a loan without stating any income as long as the property cash flows.
Oh.
The rent will cover the mortgage. We can get them qualified for a loan. Mm-hmm.
Okay, so what should people be aware of if they're under contract or starting that mortgage process? What are some things they should not do?
Oh, good question. So a couple things that you shouldn't do that we have seen here in the mortgage world is don't open up any new lines of credit, right? So I know everybody's really excited to go buy new furniture. Do not go down to Wright's Furniture and open a new line of credit.
No new credit cards or anything?
No new credit cards. Don't celebrate until after closing to buy a brand new car or anything like that, because that could affect your qualifying ratios and potentially prevent you from closing on the home. Also, don't quit your job. Some people, we've had that happen before. If you do need to make a job change and it's going to be mid-process, it's not the end of the world as long as you're going to be employed again, but you definitely should consult with your loan officer before making any big decisions during the loan process. And try not to move too much money around between all of your accounts. Or if you're going to do so, check with your loan officer to make sure that it's going to work out. So there's a bunch of requirements regarding anti-money laundering and the Patriot Act that we need to make sure that we're following. So a lot of different bank transactions can be a paperwork thing there.
Okay, good to know.
Yeah.
All right, thank you again, Matt, so much for just sharing your wealth of information with us. If you have any questions or if this brought up any additional questions and you would like to contact Matt, I will leave his information in the description box below. Feel free to give him a call. I'm sure he would be happy to help you out with that.
Yeah, we'd love to.
All right, that is it for today. I hope you enjoyed that. If you learned anything or found anything helpful or useful, please do give a big thumbs up. It really helps me out. Have an amazing week. Don't forget to hit that notification bell so you get notified when new videos drop. And I will see you all next time.